Once again, thanks for tuning in. Holly Shields here for kalkinemedia. For investors, purchasing ETFs can be a wise and low-cost strategy to have optimal portfolios. However, with so many ETFs around, it sometimes becomes challenging to select the one that best suits an investor's goals. Fortunately, several factors can help us identify the ETFs offering the lowest cost and most productive for each asset class. So that begs the question, are ETFs a good investment? Well, before we get into it, please give our channel a sub and hit that bell icon to stay ahead of the game. For the unfamiliar, exchange-traded funds are the securities that track a market index, commodity, or other assets and are traded on a stock exchange just like a regular stock. ETFs are similar to mutual funds in many ways. However, one significant difference is that ETFs are traded throughout the day on stock exchanges, whereas mutual funds are traded based on their price at the day's end. ETFs are considered an attractive investment option due to their low cost, tradability, and tax-efficient nature. ETFs can be a perfect choice for diversification because they consist of multiple asset classes. Recently, the ETF market has become highly competitive. This has benefited the investors as the competition has driven the ETF fees to an extreme low. However, the growing number of ETFs has also left investors confused. A few tricks can help investors pick the right ETF. Some of the essential factors which should be considered while picking an ETF are the level of assets. To become a viable investment option, the minimum level of assets should not be less than $10 million. Trading volume. Trading volume is the best indicator of liquidity, irrespective of the asset class. Thus, greater the trading volume of an ETF, the higher is its liquidity. Look at the returns. Check the returns, including fees for different periods and how they have performed over the last few years. Underlying index or asset. Consider the different types of investments like commodities or stocks that the ETF holds. It's preferred to invest in diversified ETFs. Market position. It's normally considered that the first ETF issuer has higher chances of gathering the lion's share of assets than others. Hence, it's good to avoid ETFs that are just a replica of an original idea. A few prominent ETFs listed in Australia include Vanguard Australian Shares Index ETF, BetaShares Australian Strong Bear, SPDR S&P ASX 200 ETF, BetaShares Geared US Equity Fund Currency Hedged, ETFs Battery Tech and Lithium ETF, BetaShares Geared Australian Equity Fund, and iShares Core S&P ASX 200 ETF. Now that you're up to speed, check out some of our other videos to boost your financial IQ. If you like this info, please give us a like, comment, and a share. For regular updates, head to our website at kalkinemedia.com. This has been Holly Shields for kalkinemedia.